And hello, everyone. Welcome to another live scanning session or power scanning session. It is April 5th, and once again, we are going to be on the lookout for the best setups for the week ahead. And oh boy, what a week it has been! Crazy volatile, crazy downtrends, but as you will see, with every good crisis, there will also be good opportunities. We're going to find some really interesting opportunities today, I promise you, in this session. But before we get into it, thanks, Nicholas. I am greeting you today, so I didn't want to make you jealous, but I am greeting you today from beautiful Buenos Aires in Argentina. Yeah, that's the life of a trader. You can trade and trade from anywhere, basically. And I am taking advantage of this situation, this week and in these weeks of the year. Anyways, but before we get into it, where are you guys calling in from? Who do we have today in the room? Please put your location into the Q&A box. Frank from Den Haag, Netherlands. Hey, Frank, how's it going? Good to see you. Good to see you back. You've been away for a while, I believe. Who else do we have? Please put your location into the Q&A box. Who else is in the room today? I do see we do have a fairly full room, so don't hold back, guys. Who else do we have? Faith from Palm Springs, California. Hey, Faith. How are you? Good to see you. All right. So we have Netherlands, we have the US, we have Keith from Scotland, from the Scottish borders, bordering England, I believe. Hey, Keith, good to see you. How's the weather over there in Scotland? I remember Scotland as being a very, yeah, I like the weather a lot. It was not too hot, not too cold, just in the middle. A bit cloudy at times, but that was very nice. All right. And Keith, also from North Yorkshire, I believe. That's probably in England. Is that possible? Keith, please clarify where exactly is North Yorkshire? John from Texas. Hey, John, cool and rainy. Ah, yeah. Actually, Buenos Aires is also not too warm. And it's so funny to see, especially if you are living on the northern hemisphere where spring is about to kick in. It's quite the opposite here. It's the fall is about to start, so the leaves are turning yellowish on the trees. It's you can feel this fall spirit. It's kind of awkward, especially when we just get out of a long winter season in Montreal. All right, so Keith confirmed. Yes, that's England. Perfect. Nice. Thanks for confirming. And the other key from Scotland is confirming that, hey, it's quite sunny today in Scotland. He said it must be summer. Yes. And Werner from Frankfurt is also there. Perfect. All right, guys. Thank you so much for hi Werner. How are you? For putting your location into the Q&A box. Um I'm going to hide my video so you guys can focus fully on the webinar. Also, I believe it's a bit bright behind me, so I'm gonna hide this and let's get started with today's session. And also somebody from Toronto says hello. Perfect. Okay, so with this, we are, of course, tradingindicators.com. My name is Daniel Sinek here on the left-hand side. And as you probably know, all of you, because you've been at so many sessions, we are nearing our 10 years anniversary here at Trading Indicators. I keep saying this, and we're going to have something very special planned for this once that anniversary comes up. So back in the day, I created Trading Indicators with Homer. Of course, Homer is still on board with us. And then Niklas joined us about 5 years throughout our journey, and he's been an indispensable member of our team. So I'm so happy to have Niklas also on board here today. And he's in the chat room. So guys, if you have any questions, please put your questions into the Q&A box, and Niklas will be on the lookout for your questions. Okay. So, and what we're going to do today will be mainly driven by technical analysis. Of course, we did have a week full of fundamentals, full of big market moving events and news. But as you will see, the technical levels, at least to some degree, have held up almost to the T. What I mean by this, we're going to discover together today. And of course, we're going to use our great Liquidity View dashboard today in today's scanning session, because as you will see, it can simplify your life by a lot, because it can find the best opportunities. And yes, there are opportunities for even right now in the markets almost automatically for you. And once again, guys, if you have any questions, please put them into the Q&A box. All right. So with this, a quick reminder also that trading does contain substantial risk and therefore is not suited for every investor. If you trade, make sure to only use risk capital, which is money that you actually can afford to lose. When it comes to backtest performance or hypothetical performance, keep in mind that this is not necessarily indicative of future performance, and any trade ideas and strategies discussed in this webinar should not be construed as trade advice. These are for educational purposes only. All right. Now, a couple of quick things. If you have not done so yet, please check out our bootcamp on the Liquidity View dashboard. It will cover every single feature in that dashboard in detail. So if you have any questions or are wondering what perhaps a certain scan criteria means, well, this bootcamp will get you the answer. So Niklas, please put this link into the chat box. Also, of course, don't forget about our Discord channel, tradingindicators.com/Discord, where you're going to join a community full of traders to exchange ideas, to learn from one another, and also benefit from our automated trade alerts, which we offer for both day trading and also swing trading. So tradingindicators.com/Discord it is. And last but not least, we're going to interactively run our scans today. And it's always best if you follow along interactively as well. So if you don't have access to our dashboard yet, which you would need to follow along, please consider a 1-week trial. Simply go to tradingindicators.com/view for that. Fully free, no commitment. And if you're interested on staying, of course, we have monthly and yearly options. And the best of all, you're going to get instant access. So you don't have to wait around. If you sign up, you're going to get access right away. All right. So last but not least, our ebook, Trade The Power of Three. Don't forget about that. It will detail some of these setups that we're going to cover today. And it's a good read, I was told. So tradingindicators.com/power of three. This link is also in the chat. And last but not least, if you have any suggestions how to further improve the dashboard, perhaps with new symbols that you have in mind, which are currently not in the dashboard, or perhaps some new features or indicators or scan criteria or alert criteria, whatever it may be, please put them into the Q&A box as well, or send us an email after the webinar. All right, so with this, let's get into it. Market review. Oh boy, what a week is behind us. A bit of a scary week, but don't be scared because, and I really mean this, never let a good crisis go to waste. So this was a quote coined back in the day by Winston Churchill. I'm not sure what the context was back then. It was probably not trading. But it means basically in every crisis, there's also tremendous opportunity. And what this means for trading, we're gonna see live today, because some of these stocks which have depreciated quite a bit in the last week, these are now on sale. And you may never get a better price for these, big market cap stocks. And why that is and which stocks these are, we're going to discover today. All right, so let me move over to our dashboard. If I can find it, just a second. I'm going to drag it in right here. There we go. And let's start with the SPY. All right, so what has happened here? First off, let's have a quick look at my drawing from, when was it? Maybe last week or 2 weeks ago, where we predicted together using our dashboard, hey, this looks like a zone break retrace setup. That was back then when I said, let's be cautious, potentially. Or we all came to the same conclusion, of course. It's never just me. And this may just be zone break retrace, and we may bounce off this broken support level because it will act as resistance, and we may see another leg further down. Well, this obviously has happened. So this drawing was drawn to the T. I was surprised by the speed and velocity at which we dropped down, because I thought, it's going to take a bit longer, maybe another week. You can see this drawing ending here at the end of April 21st. Well, it came much quicker than expected. But what's also interesting is that, hey, look where we stopped on Friday, right at this former support level. No coincidence, I believe. These levels exist for a reason. We actually worked a little bit further down, and it's going to be very interesting to see how the market opens on Monday. Because if this holds, if we see, and this is not unheard of, that we may see a bounce to the long direction, I think this might be a first realistic bottom in the market that we're seeing. So if not, if we open lower, I think the next stop is going to be here at around 479 at this former resistance level. Yeah, right around here, which will now act as support. So it's going to be very interesting to see on Monday how the market opens. What I see here are many, many gaps. You see these big gaps in the market. These tend to get filled. And I believe, I mean, this is a really deep correction that we're seeing here. Keep in mind that markets tend to go up over time. And oftentimes, even after COVID, these deep, let me just go back to COVID. Boy, it seems so near, but it's actually quite a long time ago. Oh, this was COVID. Look how fast markets fell down and then almost recovered just as fast. This is possible. Yeah, it is possible. Of course, during COVID, maybe the dive was even a bit further down. But once we saw a bottom and there were signs that, hey, this is now a bottom in the market, things recovered just as quickly. So I'll be very curious to see. And I believe if there are signs of some kind of a reversal to the upside, this could be a first attempt at taking advantage of this bottom in the market, especially since our zone break retrace setup, this technical setup has played out now. So that's done. Now we are still in the bull market. Don't forget about this. MA Rush is still bullish. It's been bullish for a long time, and it has weathered all these deeper corrections. You can see it here, no problem. Of course, this is another really deep one, but also was this one here. Back here in, when was it? In summer 2023. A big, deep correction. Of course, prices were much lower there, so it doesn't look as deep, but it felt almost the same. Just let me measure this real quick, just for the fun of it. We do have some time today. Let me see how deep this correction actually was. I'm going to use this measuring tool, and that was 10%. Okay, only 10%. Okay, definitely less than what we have right now. Let me just also measure this one here. We should be near the 20% retracement level right now. So I'm going to go from the high here to approximately this low, and we are at 17%. Yeah. So the option professor predicted 20%. I guess which would be somewhere near this level. We'll see if this is gonna pan out. But I think this could be a first realistic bottom in the market because we are at this key support level now. If this holds, if we bounce back, and I think this is not unrealistic at all, depending on how the week opens on Monday, we may see a bottom in the market and a great opportunity, of course, to potentially re-enter in the long direction. All right, so that's the SPY. Now let's look at the Qs. Oh boy. Qs are always a bit more dramatic than the SPYs, but also here, look, guys, where we stopped. And this level was drawn, I don't know when it started, back here somewhere, like back in October 2024. We knew about this key support level and prices stopped there. I mean, we'll see what happens on Monday, but this is also here a very similar picture to what we have seen in the SPY, where we may see a bottom here, especially if we do see some bullish candles rolling in on Monday. If we do, I mean, it's too early, of course. If just one bullish candle or two will not change. Well, we'll not decide where we're going to end up. But at the minimum, I think we're going to see the gap fills here. See these bigger gaps here? I've been talking about gaps quite a bit. So at the minimum, I think if we see some bullish candles, we're going to retrace back to this level around perhaps to fill those gaps. And then we'll have to see what's going to happen. Maybe another leg further down. Who knows? But yeah, it's going to be very interesting to see on Monday. Now, IWM. I was hopeful that the Russell perhaps would hold its key support level. It didn't pan out. We bounced up twice off this key support level here again. But of course, as everything went downhill, so did the Russell on Thursday and Friday. And now here, we are kind of in limbo. Yeah, you can see we're right in the middle between this support level, which held up twice, a little, at least to some degree, and now we broke it. Next stop for the Russell, which of course has a bit of a different characteristic than the SPY and the Qs. The next stop might as well be this support level down here at around 161. We also broke this level here. Not as fast, I would imagine. So a bit, the bars are a bit less volatile on Thursday and Friday. And this is because we already corrected so much in the Russell over the last months. So that perhaps this is the reason why, this downfall was not as big, but still significant. And, if it continues, I think at 169 will be the next stop to look for a bottom. Okay, oil. Oh boy. Didn't we say something about oil last week? Hey, we are perhaps approaching the upper range of this long-term sideways channel. Well, the opposite has happened. We were in the middle. And in fact, what else did we say last week? Didn't we talk about strangles as well? That this could be an interesting idea for an option strangle, which is a non-directional play. Betting on the fact that, hey, we are right in the middle here. Prices will move. We just don't really know which direction, further up or further down. Well, a strangle would have been a brilliant idea had we taken it at this point, because look where prices ended up. At the lower end of our channel here, right at 66. Again, no surprise that we stopped here. This is a significant level. That's a support level, exactly where we stopped. And now things are very interesting, because I always liked oil for the fact that it's so range bound. Look at this. It's always recovered from these extremes in the last two years, give or take. So now we're at the lower range. Perhaps an interesting idea to bet on a bounce trade here, that we're gonna come up a bit. Well, bounce from this level here, we're now at 66, or perhaps down here at 63, 64 at this former support level. So I would give it a bit of room if I were to go long, but this is definitely an interesting situation right now in oil, because we are at the lower extreme of this long-term sideways channel. Look how beautifully prices have responded in the past when it approached these extremes. So to me, definitely an interesting situation right now here in oil. All right, so one more, or maybe two more. Gold. What's going on, gold? Finally, we see a bit of a retracement in gold. Whether this was driven by the news that transpired last week, or perhaps just a regular correction because we're so extended in gold, nonetheless, this is a great situation. I really hope we're going to get a bit further down in gold, maybe closer to at least this MA rush line here, and then it would be a great pullback opportunity to enter into this long-term gold situation. I don't think it's going to go away anytime soon. Inflation talks is still very much present across the board. So I think if we see a bit of a deeper correction, an interesting long opportunity will unfold here for gold. Right now, it's a level 2 pullback. As per our trend radar indicator, you can see it here. The first two rows are reddish. Finally, a little bit of a pullback. It's been so green. I'm really hoping this pullback will go at least to level 3, maybe level 4, which would be a dream situation, and then enter long into this gold trade. So I'm going to wait here, but if we get this pullback, definitely something of interest. All right, and let's look at Bitcoin one more time. Well, not one more time. We haven't looked at it today, but we typically look at it. Bitcoin. What's going on in Bitcoin? There we go. Alrighty, so Bitcoin didn't move that much, huh? Considering what happened in the market, it kind of, I don't know, went slow and sluggish. So we're still, stuck at this $83,000 range, and we've talked about this a few times that, hey, perhaps some analysts at least predict this. We may see levels of 150,000 in June or July this year. Well, we gotta hurry up. And perhaps this could be a first bullish sign for this, because everything went downhill. And to some degree, Bitcoin has been correlated with the big US indices. It didn't do anything basically in the last 2-3 days. It stayed where it is. And maybe this is a sign of strength in Bitcoin, and we may see a higher as the markets recover from this big correction as we're seeing. So for now, I would stay on the sidelines. But if we see some signs that, hey, we're gonna make a move further up, maybe that could be an interesting opportunity to bet on the fact or anticipate a move towards an all-time high in Bitcoin and perhaps even 150,000, which seems crazy right now. But hey, people talked about this, and it might be still out there. There's still a bit of time, still 2 months to go. And with Bitcoin, you never know. It moves super fast when it moves. All right. So that's that. Niklas, do we have any questions so far about this market outlook?
No, Daniel, we just had one comment from John saying he's looking forward to an analysis of the indices selling off and if there's any big name stock setups. And then Mike says, what is the MA rush line? So that's a long-term momentum reading. It's one of our own indicators based on multiple time frames. And I suggest I'm going to send you the link to our boot camp. We have a boot camp which explains all of it in detail.
Yeah, perfect. Exactly. So Mike is referring to these lines here. We have 3 of them as per our MA rush indicator. This is one here. So I disable and enable it. You can see it. And yeah, these are faster, medium term, and longer term MAs. They're not stuck to a certain period because they are based on different time frames, higher time frames. And this is also why they're a little bit, jaggedy, not as smooth because they come from higher time frames. All right. So I hope this clarifies that as well. All right. So, what is next? Well, let me go back to my slides and actually have something else to say before we talk about, hey, how can we possibly find interesting setups in these crazy market conditions? Well, first off, I already told you why. Never let a good crisis go to waste. This is a bit of a crisis right now, but as you will see, there is opportunity right now. This is a major pullback. Everything is on discount, more or less. Okay, that's one thing I wanted to say. The second thing is, and when Jim, and I refer to the option professor, you may know him, he's on our webinars quite a bit. He once said something of interest. I had to think about it a little bit first. He said, hey, it's not a stock market, it's a market of stocks. What the hell does that mean? Isn't it the same thing? No, but what he really meant by this is that even though the market overall, as a whole, in its entirety, is correcting a lot right now. It's been falling. There are still individually companies and symbols out there which completely do the opposite. Yeah, would you like to see some evidence of this? Well, let's see. All right. Of course, many stocks are falling. No question about this. But there are exceptions to the rule. And guess what? We could have, at least to some degree, predicted that these stocks will show some signs of strength because of technical factors. One example is Kroger. I believe, and I forget because you have so many things going on, I believe this was maybe 2 weeks ago or maybe 3 weeks ago, our trade of the week in our newsletter. Maybe not. Maybe he called it out in the Lunch and Learn, but I'm sure he mentioned it. And here we said, hey, Kroger, and actually let me see what our trade note here, right here is from March 22nd, so 2 weeks ago, we said this is a beautiful zone break retrace setup. It's a long-term bullish stock. You can see it here. Perhaps a good long opportunity around the 64 level here. You can see it here. You can still see this little rectangle here. And look what happened. Of course, Friday went down a little bit, but considering what happened in the market overall, which was in free fall, this stock went up. This could have been a very interesting trade. And we even got the fill here. Yeah, this would have been a beautiful opportunity to lock in some profits in the long direction against the overall market momentum. All right. So that's it's possible. Yeah, individual stocks can still rise. Another example is Lincoln Educational. If I can spell it correctly. This one here. This also was on our trade notes at some point, maybe even a trade of the week. Or I'm sure we called it out at some point. Look here, we said, hey, maybe an interesting long opportunity because we were coming right off the support level, 114.30. What happened now? Well, we are definitely off the support level. Look where we were. Of course, they fell a little bit, but considering what happened in the overall market, this is pretty decent. Yeah, so individual stocks can still rise, and it's still worthwhile to consider them to the long direction if they fulfill certain technical criteria. All right. Okay. Sorry. It's a dry air here in Buenos Aires. Okay, next, let me go back to my slides and let me discuss now what are some of the criteria and setups that we are looking for. Because, we're very much technical traders. I believe that this is the way to go, because interpreting fundamentals and, most importantly, predicting what they may do to the market and whether they are already priced in right now or not, that's inherently difficult. It is much easier to only focus on the technical aspects, because many times these are almost just, or these are just as accurate as the fundamentals, maybe even more so. All right. Now, what are we going to do? We're going to look at one setup at a time, as we always do. Then we're going to create a hot list with the most promising setups, and then we're going to go through our hot list to see which ones are the best ones in that hot list. So let's get into it. First setup, our classic healthy pullback together with a long bounce scenario, meaning we need to be in a long-term uptrend. But as you know, every trend, even though it's been going on forever, it doesn't go up in a straight line. They correct every once in a while. They take a little break. And these corrections, these are great opportunities for us to potentially re-enter into this long-term trade. We call this the healthy pullback. One example, even though it's quite shallow so far, but one example of this is gold. We talked about this, GLD. Look at this. Finally, a bit of a correction in this forever uptrend. I'd love this correction to be deeper. Ideally, right now it's only level 2 correction. You can see here, level 2 pullback. We also have this level 2 here in our scanner. This correction, if this goes to level 3 or 4, I'd be all over this, because this finally gives some relief. The stock is not so extended anymore, and potentially a good opportunity to enter into this long-term uptrend. So I'm waiting for this as per our trend radar indicator. And ideally, we'll see if this happens with gold, but it may happen with some other symbols. We want this to be correlated with a support level. So this correction that we may see should also be bringing price near a support level, because then we can anticipate a bounce from this support level to the upside. All right, so that's the first criteria we're going to look for. All right, so back to the dashboard. There we go. I clean this out. We're scanning right now 5,013 symbols. And the first thing I want to show you guys that's super interesting, I'm just going to select the long bounce setup as per Liquidity IQ and look at the number you're going to see here once I put this filter on. You're going to be surprised. Maybe not surprised, because it's definitely not surprising, but you're going to be astounded, perhaps. Maybe that's the better word. Okay, so long bounce. And look, 1,092 stocks are currently at a support level. Meaning they pretty much all dropped. How many stocks drop? This is 20% of our entire universe of stocks is currently at a support level. That's a huge number. During more bullish market conditions, I think this number was maybe 250, maybe 300. Right now it's 1,000. And this explains, of course, even though there's always outliers and some stocks will outperform the market and do quite the opposite. Of course, many are correlated with the overall market conditions right now. All right, that's I thought was very interesting to see, and of course, testimony to what we see in the market right now, this major correction. All right, so lots of opportunity here. All these stocks are at a support level, like this one here. Yeah, see, what's this one? Asbury Automotive Group. Okay, at a support level. This one here, ACGL, Arch Capital, on Friday fell to the support level. All these are of interest, but we want some additional factors. What else do we want? Well, we also want that, hey, trend radar still gives us a healthy pullback situation, meaning, the pullback was not too deep yet. Ideally, it's just, deep enough to be considered a healthy pullback, meaning that it's more likely than not that the overall long trend will continue. So that's what we want to look for here. So I'm going to select level 4 pullback. Now we're down to only 42 stocks. So not many are shallow enough, but quite a few are. And one that comes in mind, for example, just as an example, is one of our very reliable horses here, AJG, Arthur J. Gallagher. We've called it out a few times throughout these sessions as a very bullish stock. and now it's on discount. And I think we called it out here when it was first at this former resistance level acting as support. It went up nicely, bounced off this resistance level, and now it's stopped once again at this support level. So definitely this is a stock which I'll be looking at very closely for a potential long entry once again after this tremendous pullback here. So AGG has been very reliable with us. Let me just quickly check how many times we had it on our radar so far. So we called it out on March 15, which probably would have been a very nice call. And it was just down here. It went up. Could have profited there. Before this, we had it on March 8, the week before. Yeah, also interesting. And then before this, we had it on for the zone break on February 8th. Yeah, over and over again. AGG has been very reliable and very promising to us in the past. So once again, I'm going to add this one to our hot list. So for this, I'm going to create a new watch list. I'm just going to go down here and click create, put today's date, setups, setups, 2025, April, is it the 5th? It's the 5th, I believe. All right. And create. And we're going to add AG Gallagher to our hot list. Perfect. Done. All right. Okay, so this is pretty good. We see all these candidates here. We have 42. And there's one thing I'd like to do in addition. I'd like to filter also by bullish trend, like long-term bullish trend. I don't want to have stocks like this one here, cop.de, which I believe is a German stock, which actually has been bearish for the most part. Yeah, for these kind of stocks, I don't really look for a bullish entry. I don't for bullish bounce because they're so bearish to begin with. So I'm gonna, eliminate these by setting MA Rush to only look for bullish stocks. Now we're down to 40, and then I like to sort for trend duration from longest to shortest. And we can see here Arthur J. Gallagher, yes, is right up here in spot number 2. Spot number 1 actually is also a German stock. So for the German guys among us, the German telecommunication, which by the way owns what are they called? Are they called the same in the US? I believe so. Let me just quickly have I believe they are called that. There's also a US part of this. So this US part of it is owned by this company, which has been very bullish over the years. You can see it here very reliably. But finally, we got a level 4 pullback. I love it. Right down to this support level. So this is definitely an interesting long opportunity if you're able to trade this particular stock in the German stock market, right, coming off right the support level. And here we can look for a bounce to the upside, especially after this deeper correction. We can see here a little bit. It's a bit hard to see that trend radar indeed has 1, 2, 3, 4 levels down red. The last one is still green. This is what we call a level 4 healthy pullback. All right, so we're going to add this one as well to our watch list. Moving on. So we had AGG. Now, Barrett Business S. BBSI. Let's see what's going on here. All right, just zoom out a little bit. Yeah, definitely very bullish. Okay, let me just make this a little bit bigger to get a clearer picture. I want to see if there's any gaps we have to be aware of with this symbol. Let me just quickly get rid of MA Rush. Yeah, we had this gap here. I was worried about this a little bit. I saw it. So, as you know, I think gaps are more likely to get filled over time than not. Right now, it seems that, hey, we had this push down to the support level. Will it hold? Well, it might. It held here before previously. We may see another bounce. If not, we may see an attempt at filling this particular gap here before this breakout happened. So you have to be careful of this, but I'm gonna add it anyways to our watch list. It seems to be like a nice opportunity here to capitalize on the fact that, hey, this is long-term bullish and we are near a support level. All right, so I'm going to add this one to our watch list as well, and perhaps one more, or maybe two more. The Lerv Corporation. Well, what a huge down day on Friday. I guess they must be impacted quite a bit by all these tariffs talk and reciprocal tariffs and so forth. But, this big bearish bar, where did it stop? It's no coincidence, right at this support level. Showing you guys that, hey, even though this is all driven by fundamentals, the target of this big retracement, hey, this was predictable. by our key technical levels here. Showing you once again how powerful these are. And I like it. This is once again also a good opportunity here to potentially enter in the long direction. This is a long-term bullish stock. Look at this. Every single level 4 pullback. This happened in the past quite a bit. Every single level 4 pullback has been bought. See this here in Trend Radar. Look at this. This is fascinating. All these red patches here across the board. I have to go really far back to see a pullback which went deeper than level 4. Here, last time in June 2023, where we had a deeper correction. But if you believe in patterns, the pattern for sure here is that every pullback has been bought. Of course, you want to see where the market, how the market opens on Monday, but this could be an interesting long opportunity here to get into this long-term bullish trend. Yeah. Interesting. All right. So this is Löw. Oops. Back to my dashboard. We're also going to add this one to our list. And perhaps one last, I think there's quite a few candidates here, is that also this stock here, which is Esquire Financial Holdings, ESQ, is also now trading right at this support level. The only thing I don't like about this one here is this gap here. You may think I'm obsessed with gaps, but hey, this happens all the time. We already saw a bit of a bounce on Friday, strangely. But we didn't fill the gap. We got close to it. This may be still on the card. So here I would be careful. We may see another leg further down. If we do, if you see this gap fill, then of course it could become an interesting opportunity if it afterwards goes back above this level here. So I'm gonna wait or stay on the sidelines of this particular stock. All right, so this was our bounce setup with a healthy pullback for long-term bullish stocks. Niklas, are there any questions at this point?
No, but we got some interesting comments. So one is from John, and I checked this chart. It's actually very interesting. He says GameStop, so the big stock that flew up, thousands of percent a couple years back. Yeah. GME is actually rising, and looking at the chart, it's right at a support zone. Just 2 weeks ago, it flew up. It really has the potential for big moves. It flew up 50% in about 4 days, then dropped 50%. And now we're moving up off the support. There was a liquidity capture, and on TradingView, actually, it's just broke above the tier 2 zone. So I thought that's an interesting one.
Tier 2 volume IQ zone, of course, that is, right?
Yes, sorry.
Yeah. It is an interesting one. I mean, but to me, the only way to play this would be with options. I'm not as speculative. I'm not sure if it's optionable. Let me see. It might be. Let's quickly go to our optionable column. Yeah, it is. Yeah, I mean, if you want to gamble with options, I think it would be the right play to do it. Of course, the VIX is astronomical right now, which definitely will affect option pricing. High volatility means higher prices. So, but who knows? If things calm down on Monday or Tuesday, perhaps an interesting long opportunity. Thinking, hey, we may see another huge bounce off this level. If we do, yeah, an options play could be the right play here. Absolutely. So thanks for that. Yeah, any other commentary?
Yes, and then Kevin says, because it was strange how the stocks fell and gold also fell, at least for a day. So Kevin said maybe the reason, or the obvious reason to him why gold sold off, is probably traders and institutions had to cover their losses on trading. They needed cash, so they exit their gold positions. And then Kevin also says, and remember, I think this Wednesday, there's a second round of tariffs coming, April 9th. So that's probably going to be another big day. And Kevin says it'd be nice if we had a new filter for tariffs. So to know if there's a low or a probable high impact for certain stocks, which is an interesting idea.
Yeah. For these kind of things, if it's, I would be wondering, how would we implement such a filter? Because we are a little bit at the mercy of what our data provider gives us. I believe they don't have a criteria like this because, as you can imagine, going through 5,000 symbols manually to analyze them, if they may be impacted or not, that would be a bit difficult. But yeah, it's a good idea. Let me see what kind of data we could potentially extrapolate or use for that purpose.
Yeah, thanks. And then his other comment was just mentioning, hey, a lot of big stocks this earnings season are going to be affected depending on which countries take off their tariffs or reciprocate. And one symbol he's going to look at is Nike, which might have a big problem, according to Kevin, like so many other companies during the earnings season. And that's NKE. And then our last question was from David, which is going to be a symbol request. Do we use? So do you want to take a look at that one? It's actually a question more, Daniel. It's CME.
Yeah, let's get to these symbol requests towards the end. Let me do the other setups first. But yeah, Nike definitely has been in a very long-term downtrend. 727 days of bearish MA rush momentum in Nike, and yeah, it seems to not be stopping. We just broke below this key support level here. Get the zone break. Just real quick, since we're on this topic. Now you can see it here. Zone break. Huge downwards move. Yeah, it is definitely bearish. But look at this. Even though this is a big move, retracements are possible. And I would not be surprised if, on the short term at least, we're going to see a move towards this broken level once again, and then it will really take off further to the downside. So never neglect those chances that this may happen. This initial retracement back to the broken level is more often or more common than you think.
And Daniel, on that note, just looking at our little gap prototype, gap detector prototype on Nike, gaps like that on the daily chart, apparently over the past 20 years, have happened 26 times, and every single time they've been filled when they gap to the downside. And one question from John is there a filter for high vol or low vol? I'm guessing you mean volume for options. So can you know if there's high or low volume in an option?
Volume or volatility, that would be the question here. It
I'm not sure, yeah.
Maybe John clarify. If it's volatility, we do have a column here called where's it?
Volatility.
Okay. Yeah, so here you have this column here called volatility, and you can filter for what is the volatility. That's an estimation. It's not the same as implied volatility. We don't have that data point, but it's an estimation of that, and you can at least grasp a little bit of how much volatility is in that symbol right now, which of course will affect option pricing.
And the last question before we can go on is, do we also review futures in these sessions?
Not too often, because this is mainly a swing trading session. But we do review futures every when is it, Tuesday, in our lunch and learn session. So there we have a day trading component in those webinars, and of course in our Discord, the link is in the channel. We review futures all the time for day trading opportunities.
Thanks. Okay, and the rest is symbol requests for the end.
Perfect. All right. Okay, so we do have one more setup, which I like to see, which is our famous zone break retrace setup. So what is this all about? Well, as we've seen in the SPY, nothing lasts forever. At some point, every level is broken. Quick example here. Where is it? SPY. Do we have a filter on? Oh, there we go. Okay. So here, this is the classic example here of a zone break retrace. Textbook, actually. So here, let me just take 1 second. Let me just take my drawings out real quick. There we go. Okay. What do we see here? Well, prices were at, prices broke back here, beginning of March, below the support level. We saw some initial follow through, but then prices came back up. And where did they go to? Exactly to that broken support level, which is now acting as resistance. It has swapped roles. It was support, now it's acting as resistance, and then it dropped prices further down for the real follow through after this zone break, which we are witnessing right now. And this is exactly the reason why we said 2 weeks ago, hey, don't be too optimistic. We may see this bounce happening. It doesn't happen all the time, of course. It would be too good to be true, but it is a high probability setup. Zone break retrace. We love it enough. We love it a lot because, it's the classic market fake out pattern too. So markets initially go down, then it tries to fake you out by going back up, and then a little, the real follow through happens. So this happens all the time. Look at this slide here. Zone break initially goes down, back up, and then the real move happens. Or here, to the upside. Zone break, it initially goes up, back down to the broken level, and then the real move happens. So this happens all the time. And this is why we like this setup so much, because we are basically skipping this initial market fake out, and then we are considering a position in the direction of the breakout. All right. So How do we find these? Well, actually quite easily. We're going to clear our scanner, and let me just clean this up a little bit. I'm going to remove optionable just for now, and also volatility. All right. So all we need to do is to go to our liquidity IQ setup column here and select long break retrace. And click on it. And we can see, okay, 19 stocks right now, this changes every single day, are currently in a long break retrace state. Yeah. Okay, let's check them out in the long direction. This, of course, also works in the short direction. So just real quick, I'm curious to see how many do we have in the short direction. 10. You see a good one. Just for the fun. Normally, we only do longs here in these setups, but let's see at this one here. GROW. Yeah, here we're already too far away from our zone break retrace. We came back up here, but this move is now already unfolding now in the direction. But you get the idea. Zone break, retrace, and then the real move happens. Oh, this one here. ANY, Sphere 3D. Zone break, retrace. This is a bit closer now to the broken zone, and then the real move may happen. Like one more just for the fun of it. First, Gertie Bank. Okay, zone break, retrace. Down again, retrace again, and then the real move may happen. So you can see this happens in both directions. Yeah. So if you are interested in the short direction, which may not be a bad play right now, especially if you use options, buying put options, if affordable, of course, if current volatility has not made option pricing too expensive. Yeah, something to consider. All right, so that was that. But let me go back to our long scenario. So move this and go to long break retrace. What do we have here? All right. First off, Darden restaurants. We had Darden also a few times, I know it, in our trade alerts. And look at this one here. Beautiful break above this resistance level. Price initially goes up. Actually, we had a couple of gaps here. Oh, I like this one a lot. Look at this. I like it because we filled this. Did we fill this gap? Almost filled this gap. So this gap is filled. This gap is filled. This one almost filled. Very close to it. If you are a stickler to the penny, you may expect another attempt at filling this gap. I think this is not unheard of. But if we do, if we come down to, where's my drawing tool? Nope. This one here. There we go. If we come down to this level here and fill this gap, this could be a great long opportunity with Darden restaurants. Of course, we lost a little bit of steam here with these 2 bearish days, but hey, this is a long-term bullish stock, bullish for 1,119 trading days forever. And every single pullback, you can see it here in recent history, has also been bought. So if this happens, this could be an interesting long opportunity for Darden restaurants. I'm going to add this one to our list. Okay. Definitely interesting. Beacon Roofing Supply Inc. BECN. Oh, yeah, this one is not my favorite. Too gappy. I'm going to skip this one right off the bat. Of course, it is long-term bullish, but hey, this is just a little bit too erratic. What's going on here? Also with quite a bit of moves along the way. It is a zone break technically, but not substantially enough. So I'm going to skip this one. A bit too erratic. Antero Midstream Corp. All right. That's interesting. Long-term bullish, 1,094 trading days, level 4 pullback, a healthy pullback. And we just pulled back towards this former resistance level. We exactly stopped at this level, once again showing you, hey, how powerful these levels are. And there's a gap to fill to the upside. So that could be an interesting one. I like it. The only thing here, what I would consider is potentially place a wider stop loss below this support level here, because sometimes if former resistance now acting as support and the actual support are close together, prices tend to go down all the way to this level here. But still, nonetheless, an interesting idea perhaps to scale into a long position in this long term, yeah, bullish stock, anticipating, hey, we may see a gap fill to the upside. I'm going to add this one as well. All right, so that's a few more in here, and you of course, can go through the list yourself. Okay, so this is how I like to scan for it. It's super easy to do. Now let's go through our hot list. Unless there's some questions right now, Niklas, regarding the zone break retrace setup.
Nope, no questions about that.
Okay, So now let's go back to our watch list. I'm gonna clear out our filters first and gonna go down to our watch list, which is right here. Oh, by the way, guys, one thing I forgot to mention. A new thing which we implemented in the dashboard last weekend, but you may not have noticed it yet. It now completely fills out exactly your screen. So I'm on a laptop, on a small laptop here, and you can see no more scrolling needed for the overall dashboard. It fits in perfectly onto your screen. So this was a usability feature requested by a few users, and we've implemented it now finally.
And Daniel, I actually made a mistake for zone break retrace. Although it's a simple request, it is a zone break retrace. If 2 people have asked about it, it's called CME. So maybe it can end up on our watch list.
Yeah, the CME. All right.
David asked about that specifically. He said, which prices would we follow? Do we use the resistance zone labels and ignore the actual levels? Or sorry, I think he's talking about the long stop and the long target. What do we usually pay attention to? The zones or the actual stop and target labels?
I like to look at these well, two things. First off, yes, that's an interesting zone break retrace, especially after Friday's big retracement back to this former resistance level. That's a nicely bullish stock. As you can see here, it's been going up quite consistently since, yeah, at least August 2024. Oh, this big retracement. So yeah, this is of interest. And for the where to put your stop, yeah, you can ask your indicator to put the stop level here wherever the indicator thinks it should be. And this is based on where's the center line of this former resistance level and what is the current volatility of the market. If it's more volatile, it's going to be a bit further away because you don't want to be, stopped out just because of volatility. If markets are calm, it's going to be a bit closer. So this is how the indicator chooses these levels. What I like to do is to check at least whether they also coincide with kind of a technical level as well. Do we see a swing low somewhere? And here the only swinger which it's a bit wild, is potentially this one here maybe, or this point here could be a swing low. So maybe give it a bit more room, which might not be the worst idea. Or if you want to be a bit more aggressive, this swing low here, perhaps make it a bit more tight. So this is what I would be looking for. But this level seems to be pretty well chosen right now, at least for the CME. Yeah.
Perfect.
Okay, cool. All right. So now let's have a look at, and let me just actually add CME to our watch list too. I liked it. Yeah, it's a good symbol. Oops. There we go. Okay, so add this one as well to our watch list. All right. Now let's have a look. What are these symbols in here? All right. And sometimes if you go to a watch list, you don't see all the symbols that should be in there because we added quite a few more. Make sure there's nothing in the search filter here. As you can see, if I delete this, they all will show up. So we have 7 symbols. You can see it here. Let's go through these one by one. Let me just start with the bounce setup. Yes, for the German traders among us, I like this one a lot. German telecommunication company, long-term bullish at a level 4 pullback and a key support level for a long entry. Definitely of interest. I'm going to add this. I like this stock for a long time. I'm doing these webinars with Cap Trader, a German company, for a couple of months now, and we've discussed this stock in particular quite a few times. So yeah, definitely of interest. AJ Gallagher, yes, our good old friend. I love this stock. It's a beast, as some people may say. It's very reliable. And even if this retracement will be deeper, which is not unheard of course, this is kind of a falling knife, what you see here. I still like this company a lot. So I would hold on to it even if you go down to this level potentially, because I think we're going to recover from these market conditions. And this is a very strong stock, which I think will be one of the strongest stocks to recover. So yes, definitely also AG Gallagher, yet again, on our trend radar here. Trade radar, I should say, not to be confused with trend radar. All right, adding this one as well. All right, perfect. Okay, BBSI. A stock I don't really know. And here we have this gap, which I don't like too much. I'm always worried about this, that, hey, we may see another attempt further down. It's quite volatile. We already bounced off this level once and came up. Now back here again. You know what? I'm going to skip this one just because it's a bit too technically not clean enough. So lots of back and forth, and levels didn't hold in the past, like this support level here. So let's skip, or the support level here. Let's skip this one for now. Louvs. Yeah, big company. What a fall here. Similar to Arthur Gallagher, huge fall. I can imagine that this company, I believe it is in the consumer discretionary field. Let me just quickly add my stuff back in. Where is it? 1 second. Sector. Oh, sector should be here. Oh, financial services. Oh my God, I was completely wrong. I was thinking about Lowe's, whatever. Completely off. Oh, whatever. It's in the financial industry, so maybe not so much impact. I don't know how much the banks would be impacted by the tariffs. But who knows what the effect is? Definitely a big down day. Probably most banks have tanked a little bit, just like Arthur J. Gallagher, but right to the support level. Definitely an interesting one to look at. Let me just quickly see what they do. Oh, commercial property and casualty insurance. Oh, okay. It's the insurance space they're in. Interesting. Okay. Yeah, but I think that's definitely not a bad, from a technical point of view, a great setup. Good retrace here, and every single pullback has been bought in the past. I'm going to add this one for sure.
And one
Also
we can
to
look at
our
later,
watch.
Daniel, that's going to be my symbol request is JP Morgan. You're talking about banks and it plummeted big time.
Oh, yeah, JP Morgan. Good. And I think we had JP Morgan also as in our options alert as a strangle. So yeah, definitely all the strangles, I think they must have been quite successful because markets have moved a lot. So congratulations on all those who are on our options alert service. This must have been quite a week for most of you. Okay, but I do like this one here, Loaves. I'm gonna add this one as well to our stocks to consider for next week. All right, and Darden. Yes, good old Darden. We had a gap down here, a gap which looks to get filled, so I like it a lot. If we get down here, I want to wait until we actually get to this zone here, fill this gap, and then I think we're gonna see another leg further up. Definitely an interesting one. So also this one to be added to our list. Perfect. And two more. Close. Two more. AM Antero Midstream Corp. Huge gap. Okay. I mean, I don't want to take all our symbols, but I like this one too. So once again, if we see some signs that some bullish signs, I think this gap here, this huge gap, again, we will fill it over time. Maybe not right away. Maybe we need a wide stop all the way below the support level here. But if you give this this symbol a bit more space, so to say, I think this is an interesting long candidate as well. So adding this too. And finally, CME, thanks to your somebody who pointed this one out. Also CME, definitely an interesting one to consider. Absolutely. I wonder why CME might be impacted by the tariffs. Maybe that's for other reasons, or maybe just the whole market. It's just a bit confluent with the overall market situation. But yeah, a big down there on Friday. But hey, once again, opportunity for us potentially to get into this symbol relatively cheap right now. So yes, this is an interesting one too. Great. All right. So Nicholas, what was your symbol request out of curiosity?
It was JP Morgan, but I'd like to let's do mine after we get through everyone else's.
Okay. Perfect. What do we have?
Okay, to start, we have BAX.
BAX. Baxter International Inc. Healthcare. All right. Yeah. Okay. It is a bearish stock. But we are at a support level. We're coming down. A bit of a downtrend here. Bearish for 761 trading days, so quite some time. A big jumps down. It's like stair stepping down. You can see an interesting stair stepping pattern here in the symbol. Once this loads, there we go. Steps. I'm definitely making lower lows consistently. I would personally not bet on the fact that we're gonna see a bounce off this level. It is just too bearish for me. And I think we're gonna make another step further down, making another lower low, as we've done over the years so far. So no, not confident that this support level will hold because we're too bearish.
Perfect. Okay, and now we have a comment. I actually agree with this. Two people brought this up. John said, some people actually do swing trade futures. And another user said, the indicators are probably the same for futures and stocks. So they would appreciate if everyone else sees the benefit to also review ES and Q gold futures sometimes on the swing trading
Oh yeah, for sure. Let's
scans.
have a
And
quick look. Yeah,
it's good too to help keep context, even if you're day trading.
yeah, absolutely. So yeah, let's see what happened here. I mean, oftentimes these are somewhat related to our SPY and QQQs that we review in the beginning, but yeah, you can see it here. We are it's actually the exact same pattern. Zone break retrace, broke the support level here, went further down, retraced back to this former support level, now acting as resistance, and this big move down to this resistance level here. Let me just quickly, just for the fun of it, overlay the SPY, well, not the indicator, the symbol to it, just to have a bit of a view of how correlated they are. They must be, of course, super correlated. Obviously, they're tracking the same thing, just slightly differently. Yeah, look at this. I mean, by reviewing, I believe, the SPY, we will pretty much cover ES as well. But yeah, we definitely can have a look at them, see if they perhaps the levels are a bit different. And of course, if you have confluence between levels, then it may be even strengthen that level further.
And
Good
Daniel,
idea.
can you please take a look here on that symbol? If you can expand vertically the chart so we could read what it says for the support level
Yeah,
in
yeah,
the
one
little
second.
box. It says 5244.66 to 4995. We had a comment that the ranges mentioned there don't mention the match the actual rectangle drawn around the zone. So
They should in theory match. Let me just quickly take off SPY here because that's distorting it a little bit. Let's have a look. Okay. So, what are these levels here? So, 5244 should be the upper. Oh yeah,
I think we
that's a very
noticed
good.
this a couple sessions back that
Yeah.
maybe there's a bug where it's based one bar back the actual like drawn
Yeah,
the
yeah.
volatility of the square, but the actual zones mentioned in the labels, those are the correct zones that match up with TradingView.
Oh, that's a very good point. Good. I'm gonna note this down as a potential bug because yeah, you're right. That definitely doesn't seem to be these levels. But yeah, focus. Take these ones in here. These are the correct zone labels.
Perfect. And then from Garrett, he says, in German, please, I'm not sure what that word means, Berkshire Hathaway. So bitte Zeg or Zage.
Yeah, yeah. Good attempt. Uh, no, okay. Okay, Berkshire. Yeah, let's have a look at that one. Okay. Also, long break retrace situation here. Good old Warren Buffett. He's still out there doing his stuff. Amazing. What a role model. Yeah, but you can see it here. Oops. Long-term uptrend. Just quickly hide this a little bit. Why is this? Is this second, guys? Okay, there we go. Put Emmy Rush on too. There we go. All right. Yeah, interesting one. Definitely a long-term bullish stock. Only level 4 pullbacks in the past history. Every pullback has been bought relatively quickly. Of course, some bigger ones here, but now we have the zone break retrace. Yeah, definitely of interest. I like it for a long entry right now. Even good
Perfect.
call.
And Warren Buffett was actually in the news, I think, yesterday for mentioning that he thinks the tariffs are going to be really good for U.S. markets in the long term. And now John Ford has a couple simple requests. The first one is Tesla.
Ah, good old Tesla. I think Tesla went down quite a bit yesterday, didn't it? I believe so. No pullback. Let's have a look. Oh, oh, a beautiful drawing. Once again, this is not something we prepared. We drew this one a bit early, but look at this. Bang. Zone break retrace. And we thought, oh, maybe another leg further down. These patterns work. Case in point, once again, this was not drawn just today. We drew this, and you can watch the recording, guys, a couple of weeks back. I completely forgot about this, but yeah, uh, looks like a zone break retrace to me. If it is, we'll have to see whether this level here will hold up. But if it doesn't, boy, I think we may see another leg further down. Who knows? We saw a low here, which seems to be quite substantial. We had this gap fill here, which we pointed out a few times, and now yeah, prices are approaching this level once again. I think it's potentially we're gonna actually get to this level too, and then we'll see. Do we see another bounce? If we do, well, we might be ranging a little bit between these two levels here. If not, the next step would be all the way down here at 130, 139. I think long term Tesla, I think, is not such a bad idea because it's not just, first of all, Elon Musk, I think he's seeing what's going on and he's stepping down, probably most likely all because of Tesla and pressure from his investors. I'll be surprised if that's not the case. So once he's not associated with political decisions anymore, I think things are going to calm down. Tesla is a technology company more than it's a car company, investing into AI, into these robots, which maybe a game changer in some industries and so forth. So I think long term, this company has a lot of potential, and now it's at a huge, huge discount. So it's at least something to consider.
And this also, Daniel, from our Volume IQ strategy and backtest there, right now, Tesla is at the most significant price level that it's seen in 500 days, which is 250 basically. And that's where
Yeah,
most traders are finding interest. So it's like a pivotal area right now.
definitely.
And we have a comment about Tesla. He also requested Tesla. Kevin, he says he heard and read that Tesla has three competitors for their new custom AI chip for autonomous vehicles, and something coming out in June, some important stuff for Tesla in June.
Yeah.
And he also mentioned what you mentioned about the Doge stepping down. Now, the next simple request is NVIDIA.
Yeah. Yeah, all these technology companies, they are under so much pressure. They were the big growth stocks, but I think we've seen a shift a little bit more into like these steady stocks, which don't have these crazy growth rates, but are still of interest. But yeah, Nvidia, look at where we are here. Very interesting. I didn't even look at this one. Long bounce setup. But no pullbacks. That's why we didn't find them on our scan initially. But yeah, right at this support level here at around 90. What a great support level, because after this, there's really nothing below. The next one maybe here at 75. But yeah, that's for sure an interesting long opportunity right now in Nvidia after this huge drop. How much? 20%, 60, 70%. No, that's not true. Whatever. A huge. Let me measure this real quick before I say something crazy. How many percent? 40%. Yeah, of course. Not 60. Yeah, 40% down. And at a support level right now. If you want to take a shot at Nvidia now, I think it's a great opportunity. It's a great company. It's not going to go anywhere out of business. This is a big correction, but I think now the prices are more reasonable, and potentially many long traders and investors will think the same. Hey, this could be an interesting opportunity going long here, which may drive prices further up, especially after these two gaps here too, which are looking to get filled over time.
Perfect. And okay, and another one now, AT&T. And then we have a couple bank symbol requests.
Yeah. AT&T. It's one of these stocks where you only if you only type in the symbol,
If
it's
you
hard to
sort by
find.
symbol name,
Yeah,
it would also help for it's because the symbol is T.
Yeah, first fire like this. Perfect. Yeah. Bullish for 253 days. What a parabolic move. Here, I would totally expect a longer term consolidation, especially after these huge up moves. Things tend to consolidate. I think potentially we're going to see a drop towards this level here around the, what is it, 24 level. Price and swing back and forth. But yeah, definitely interesting one, especially with this pullback, level 3 pullback right now. I would not be surprised to see another bit of a pullback here in AT&T, and then this could be an interesting long situation also for AT&T, for sure.
Perfect. And now another bank, and Goldman Sachs.
GS. Goldman Sachs. All right. Bullish for 329 trading days. Ooh, big caps right towards this support level here. Yeah, there's room left to go all the way to 440. Level 5 pullback now on trend radar, so not a healthy pullback anymore. But this was a big upwards move. Yeah, if you get to this level 4, even right now, but if you get closer to this one and we see signs say there's a bounce happening, yeah, why not take a shot here in the long direction for Goldman Sachs? Absolutely.
Perfect. And now
Gosh,
JP Morgan.
eh,
And
good old.
Lobes. Is Lobes a bank and does it have a
Yeah,
stock?
it's an insurance. I just looked it up.
Oh, okay,
It's
all right.
financial
Yes, it's just a
services.
comment
Yeah.
before.
Yeah, here we are. Unfortunately, we didn't see the bounce off this support level. Things went lower, and we are kind of a no man's land right now with JP Morgan. As you can see, right in the middle between this really wide zones. They also inverted. This is support here, and next resistance all the way down here. Broken resistance, of course. Uh, but but actually, there's another resistance all the way up here. Yeah, no man's land, yeah, 5 levels red here. I mean, it is very bullish. It's a great bank, but this is a deep correction. I don't think we're going to go all the way down here. I'll be very surprised if prices go all the way to 170. But here I would wait to see what is happening next. There's a intermediate level here at 200, also a big psychological number. Maybe you see a pull towards this level and then look for longs. But right now, I'd stay on the sidelines for JPM.
Awesome. And thank you for that. So we had Tesla. Brian, thank you for the feedback and suggestion. And now we have AMD. So a couple of tech stocks coming up.
Yeah, let's do a few more, maybe 5 more stocks because I do have a hard cutoff here in my hotel room, unfortunately. But the idea is, guys, you probably can, use the dashboard exactly the way I use them, just to talk about these technicals. All right. So what do we see here? Yeah, AMD, oof, very rangy. Look at these big ranges. It's hard. It looks very wavy too. Now we're at this level here. The next technical support level will be all the way down here at the lower end of this range. Yeah, I would wait here to see if we find a low point somewhere. It's just too wavy for me. It's anybody's guess. I think it's gonna move for sure out of this region. So strangle alert perhaps, but I think it's just gonna be too expensive to buy any form of strangle. When we see another wave up towards the 120 level or all the way down here to the 55. Yeah, very wavy. But I would not take any directional calls on this one. Too hard to see.
Perfect. Yeah, there's really not a lot of bullish stuff going on there. And the next symbol is, okay, a couple here from John. Could we look at Meta?
Meta. There we go. All right. Oh, this was our long entry here. I remember. Didn't work out. We bounced lower, but now we are is this a level? Let me just take out quickly the labels. Just a second. Just for the fun of it. Because I want to see what exactly we have here. No, that's not. That's just current prices right here. Yeah, we are also kind of a no man's land here in Meta. Zone Big Retrace did not hold up. We bounced over. Next level here. I mean, if you come down all the way here to is 441, which is not unheard of for a really deep correction at this level here. So yeah, we broke below this. Now maybe a little bit of a retracement here and then another leg down. It is possible, but the next technical level really to the downside is this one here, 440. If we get back above this former resistance level, then maybe we're gonna see some higher levels. But I would wait here to see what price is actually doing.
Perfect. Okay, and now we have a lot of tech stocks, but I think at a certain point they all start to look alike. So can we take a look at this one, CVS?
CVS. That's healthcare. Oh, okay, yeah, here CVS. Wow, look at this bounce of this key resistance level. It's a bearish stock, and I think we discussed this also last week or the week before for a potential bearish bounce off this resistance level. Look at how nicely this have happened. I believe we did this. Maybe I should check the recording of last week, but yeah, definitely now in the short bounce situation, we bounced off this resistance level. It's a bearish stock, and I'd be yeah, I like this one for the short side. Perhaps to see another leg further down.
Okay, and then I guess down one more symbol and a question.
Yeah, go for
The
it.
next symbol is, and Kevin, just because we already looked at a lot of tech, we're not going to look at that one today. He was just mentioning one of the competitors for Tesla's AI chip might be Samsung. But we have another symbol request here, LLY. So another healthcare.
Lily. Yeah. Eli. What happened to Eli? Very bullish for a long term and a good drop. Oh, I like it. I like it a lot. Look at where we dropped down. A gap, first of all, right to this support cluster where we bounced off many times before. I like it a lot for a support, for a long bounce. Good call. And I think, what did we call here earlier with Lily? Gen 18, which is already more than 2 months ago. Jesus. Yeah, we called a bounce here of 725, which would have worked out beautifully. Look where it went to afterwards. Yeah, I love it. Good call. Good symbol for a long bounce.
And
Sure.
this one, Daniel, it's a last symbol, but it ties in with the question. Another
Yeah.
user's question is Intel. So Intel, John
Yeah.
says, it's at a 2-year support low. Okay.
Yep.
And there's a ton of liquidity captures. It also, just on TradingView, I see from our volume IQ, it is right now testing the zone of control down at the
Yeah.
bottom. And the
Of
question
course.
was, I think this is a good example. What are some signs and things you look for to tell, hey, the market or the symbol is bottoming? Like we're finding a bottom. I think this is a good example of a potential bottom.
Yeah, because we tested so many times over the last almost a year, since well, eight months maybe. Bottom, 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 and never was able to go below this level, the 19 level. And yeah, it could be. I mean, it's all, I mean, the a real button I think would be an if we go significantly above this level here, then we could say, hey, 19 probably was our low. Right now, we're still testing and retesting it. And well, but until we break it, for sure, we can assume this might be a bottom. And Intel is one of those companies which are to some degree too big to fail. Lots of government contracts and facilities all over the world, and for sure they are working on, yeah, the next generation chips, AI or whatever it may be. It could be. So just like Pfizer, I think these are big companies which eventually will bottom out, and then we may see a reversal of that bearish trend, which started, well, as per Emmy Rush in May 2024, but actually a bit earlier even. So yeah,
Yes. So I think from the question there, like, what are some signs? Well, from what you just said, well, a lot of testing of a support, liquidity captures, higher lows, and then finally is the break above the range that's been near the low. So once you
yeah,
get that break, I think you were saying, then it's kind of confirmed, okay, now we're off to the races and the dropping is done.
yep, absolutely. I wonder if Intel pays any dividends. Let me just see. Because, of course, from a long term perspective, what I said, hey, too big to fail, these are like investment kind of perspectives. It could be interesting. Let me just see if dividends would be paid out along the way. Yeah, 2.24%. Not great, but they're paying dividends. Actually going down with the dividends. So I don't know. Yeah, maybe don't rely too much on them. You can see here in the history that dividends have actually decreased over the last couple of years.
And
Yep.
Daniel, do you have time for one more question, last question or
Yeah,
request?
let's do it. Yeah.
Can you take a symbol?
Yeah.
Okay, SSNLF. So 5, it's Samsung. I'm not sure if we're going to have it. We
We
don't
don't
have
have
it in the dashboard. I don't
really?
think.
No, we have this. Isn't this Samsara now? Yeah, that's interesting. Yeah, definitely we should add Samsung to our list. Yeah, that's maybe we're gonna add. I'm gonna take a note of this and we'll review it next time. Yeah.
Perfect. And then it was a comment, the last one here. Netflix is not part of tariffs. What do you think about its potential? We just looked at Netflix, but he mentions, or she mentions, analysts think stocks like Netflix and Google could rebound the most because they're the least affected by tariffs.
Yeah. These are, again, once again, interpreting fundamentals and how they may shake individual stocks is inherently difficult. So I don't really have an opinion on it. But from a technical point of view, I like Netflix. Nice zone break retrace. We filled this gap here, which is good. Check. We may see another bounce off this level, or at least this level down here at 825. And yeah, the fact that they actually don't have to export and import stuff, uh, at least nothing physically, will potentially play in their cards. But how much does this factor in and affects current price action? That's almost impossible to tell. So, interpreting these fundamentals super hard because you never know how much of this was already priced in from earlier. What is the real impact? Maybe they're still seeing some side effects of tariffs. Who knows? Yeah. All right. Because
Perfect.
people have to cut down costs. Maybe the first thing they're gonna save is the Netflix subscription. Would not be me. So I really like Netflix. Netflix and Prime is some of my guilty pleasures after work. Anyways, yeah, that was a good session, I think. Thank you guys so much for joining. And just a quick reminder, don't forget about our cool ebook, The Power of Three. And if you want to come on board with our dashboard, it's tradingindicators.com/view to take advantage of our dashboard. And guess what? What we scanned for today, you can do every single day, and not just on the weekends, every single day. There will be new setups available in our dashboard. And of course, we have the bootcamp, our Discord. All these links are in the chat. And if we forgot a question to address, reach out to us via our homepage, tradingindicators.com. Main menu, click on it, go to contact, and then put your question there. It will go straight to my inbox. And I'll make sure to get back to all your questions. All right. With this, guys, I wish you all a great weekend. Take a bit of a break, a breather from the crazy market actions we had last week. And we're all going to talk on Tuesday, when it is once again time for our lunch and learn session. All right. And the big topic, by the way, on Tuesday will be Super Trend Bullseye. Lots of stuff happening there. Some interesting ideas, but also some questions will be answered about this particular indicator. Good. With this, Nicholas, thanks so much for manning the chat room. Great questions today, as usual. And yeah, talk to you soon, guys. Have a nice weekend. Bye-bye.